Hey, so what we're talking about today is this trade that I took, showing you guys a live play of it. This is a screen recording of me taking this trade. I'm basically going to break down why, how, the things that told me, hey, you should take this trade, all that good stuff. So first what I did is I went on to the 15-minute, and I noticed that we were in a range, and we were moving towards the bottom of that range, and we have relative equal highs and equal lows. And these lows being really even, not really jagged, and price moving towards it very heavily let me know that we're probably about to enter into a liquidity sweep. It's probably about to grab some liquidity. And so then what I did is I went down to the 5-minute, and I said, okay, well, there's nothing really above the range that's a fair value gap or, some kind of order block that's real serious. It says that we need to go up now. It isn't quite time because all models are time-based. So I went down to the 1-minute, and I said, okay, don't really have anything crazy going on. We have some fair value gaps on the 1-minute being presented, and we have this one right here, which, as you can see, was mitigated. I'm going to go ahead and mark it up. And it was touched, not completely, to the 50% line. However, it was touched. If you want to go all the way down to the bottom of the big candle there, you can. But I marked up this next one to show you that it is currently mitigating this fair value gap right here, and to let you know that there's another one. And why these are forming is because it is building the liquidity to the upside to give it an excuse to continue to buy up. That's exactly what it's doing. And now we are looking back at MetaTrader. And what I wanted to show you guys is that the indicator called this. The core theory on how the market moves, it moves based on range. And there's a true definition of that range and there's not. There is gaps that the market's going to leave that is called fair value. So it's called a fair value gap. When price moves aggressively from one point to another, it creates a zone of fair value. And that gap, that giant candle in price, is where they're going to want to trade it. That's how it works. The market is a great leviathan, and the beast of the sea of commerce. This is the all of us that are traders are basically Captain Ahab. That's what we all are. I was trying to position it 792 right there. I could have typed it in. I like dragging them. It's kind of fun. Basically what I'm doing is just watching my entry, looking at the different time frames, just so that way you can see the different perspectives. But as you see, it's a liquidity sweep. We're sweeping the lows. It's coming down to sweep the lows. And I'm going to pull up the tick chart here in a second, just so that way you can watch the lows themselves be swept. And I am definitely going to add some sound effects, because I think sound effects are awesome. But yeah, you can see right there, it's just getting so close, so close to the take profit, so close. It's trying to spark some kind of emotion. Your mind wants you to watch the market and react. Don't react, observe. Observe. When you take a trade, be still and know that God is God. The market is under God's control.